You're making a huge financial mistake right now, and you probably don't even know it. Not because you're spending recklessly or ignoring your bills, but because nobody ever sat you down and taught you the rules of money. And here's the brutal truth: those rules exist whether you know them or not, and breaking them will cost you thousands of dollars over your lifetime. Today, we're changing that. This is your complete beginner's guide to personal finance. And by the end of this video, you're going to know exactly what mistakes to stop making and what to do instead. Let's start with the biggest one. Most people go through their entire lives without a clear picture of where their money actually goes. You earn a paycheck, you pay some bills, you spend a little here and there, and somehow by the end of the month, the money is just gone. Sound familiar? This is what financial confusion looks like, and it is the root of almost every money problem beginners face. The fix is something called a budget. And before you roll your eyes and click away, hear me out, because budgeting is nothing like what most people think it is. A budget is not a punishment. It is not some restrictive spreadsheet that stops you from enjoying your life. A budget is simply a plan that tells your money where to go instead of wondering where it went. When you build a budget, you are basically becoming the boss of your finances instead of being a passenger. You get to decide how much goes toward rent, groceries, entertainment, savings, and everything else. There are apps that can help you automate a lot of this process, making it way easier than tracking every single cent manually. The goal here is awareness. Once you see where your money is going, you can start making smarter choices with it. Now, here is where most beginners make mistake number two. They treat savings as an afterthought. They tell themselves they'll save whatever is left at the end of the month. But guess what? There's usually nothing left. Life fills up all available financial space if you let it. The solution is a strategy called paying yourself first. The moment your paycheck hits your account, you move a set amount directly into savings before you pay anything else, before you buy groceries, before you touch a single dollar for fun. This one shift in thinking changes everything. Financial experts generally recommend aiming for around 20% of your income going toward savings. But even if you start with 5 or 10%, you are building a critically important habit. And what exactly should you be saving for first? An emergency fund. This is mistake number three that beginners constantly skip over. An emergency fund is a dedicated pool of money set aside specifically for unexpected events like a medical bill, your car breaking down, or suddenly losing your job. The target amount most financial professionals suggest is 3 to 6 months worth of your regular living expenses. That might sound like a lot, and honestly, it is. It takes time to build. But here's the thing: without an emergency fund, every single unexpected expense forces you into debt. You put it on a credit card or you borrow money, and then you are paying interest on top of a problem that was already stressful enough. Your emergency fund is your financial shock absorber. Build it as a priority before you focus on almost anything else. Speaking of debt, let's talk about mistake number four. And this one is genuinely dangerous: carrying a high credit card balance while paying only the minimum each month. Credit cards typically carry interest rates around 20% annually. That means if you have $1,000 sitting on your card and you only make minimum payments, you could end up paying back significantly more than you originally spent. Credit cards are not free money, they are borrowed money with a very expensive price tag attached. Now, that doesn't mean you should cut up all your cards and never use them again. Credit cards done right can work in your favor big time. They can help build your credit score, offer rewards and cashback, which is huge done right, and provide purchase protections. The key is simple but requires discipline. Super important. Pay your full statement balance every single month. This is the previous month's spending. Never charge more than you can afford to pay off completely. Keep your balance below 30 to 40% of your available credit limit. Do not let it reach 50%. Again, very important. Last but not least, do not make late payments, as this is a huge hit to your credit report. Trust me, I know. Been there, done that. Do those four things, and your credit card becomes a tool that works for you rather than against you. Now, let's talk about goals, because this is exactly where most people get stuck. They know they need to be better with money, but they have no clear destination. And when you don't have a target, every financial decision starts to feel random. You're saving a little here, spending a little there, but nothing actually feels like progress. Here's the truth: money without a goal turns into frustration fast. Financial success looks different for everyone. For some, it's retiring early and never worrying about a paycheck again. For others, it's traveling the world, buying a home, starting a business, or making sure their kids never have to take on student loan debt. But whatever your version of success is, it needs clarity. Because save more money isn't a goal, it's a wish. A real goal sounds like this: save $15,000 for a house down payment by December of next year. Now you have something concrete. Now you can reverse engineer it. That's about $1,250 a month. Now you can actually build a plan. And that's where everything starts to change. When your goal is specific, your decisions get easier. You start asking better questions. Do I really want this purchase, or do I want that house more? Is this helping me move forward or holding me back? Specific goals give your money direction. They keep you focused when temptation hits. And most importantly, they let you measure progress. So you're not just feeling better about money, you can actually see yourself winning. So if you haven't done this yet, write down one clear financial goal today. Make it specific. Give it a number. Give it a deadline. Because once you know exactly where you're going, your money finally starts working for you instead of against you. Here's something else that does not get talked about enough when people discuss personal finance basics, and that is investing. Mistake number five for beginners is waiting too long to start investing because they think they do not have enough money or enough knowledge. Here is the reality: the earlier you start investing, even with small amounts, the more powerful the long term results become because of something called compounding, which is essentially your returns generating their own returns over time. You do not need to be a stock market, crypto, or real estate expert to get started. There are simple, low cost investment vehicles designed for beginners that allow you to build wealth gradually. Just do some research and you will find a wealth of knowledge. The most important first step is simply getting started. Even small, consistent contributions made over years and decades can grow into substantial amounts for the future. Speaking of the future, now let's hit mistake number six, and this one is about the future that feels too far away to care about right now. We are talking about protection, insurance, and planning for your family. Nobody wants to think about worst case scenarios, but ignoring them entirely is financially irresponsible. Life insurance, disability coverage, health insurance, these are not just products being sold to you, they are financial safeguards. If something happened to you tomorrow and you had no coverage, the people who depend on you could face serious financial hardship. And beyond insurance, if you have any assets or dependents at all, having a basic will or trust is something you should. Scratch that. You must not keep putting off. These are the things adults do to protect what they have built. Mistake number seven is one that sounds surprising, but is actually a real problem: burnout. People who try to be perfect with money, never spending on anything enjoyable, obsessing over every dollar, often end up swinging hard in the opposite direction and blowing their entire budget in a moment of frustration. Personal finance is a marathon, not a sprint. It covers decades of your life, and you need to make it sustainable. That means building some enjoyment into your budget intentionally. Set aside a small amount specifically for fun, treats, or experiences that bring you joy. When you give yourself permission to enjoy some of what you earn, you are actually more likely to stick with your financial plan long term. The deeper the truth underneath all of these mistakes is the same: financial literacy simply is not taught in most schools. Nobody sat you down and explained budgeting, compound interest, credit scores, or investment accounts. That means you have to go out and learn it yourself. And the good news is that you are already doing exactly that right now. You showed up for this information, and that matters more than you know. To quickly recap what we covered today: build a budget so you know where your money is going. Pay yourself first and start an emergency fund. Use credit cards responsibly and avoid carrying high balances. Set specific financial goals that actually mean something to you. Start investing as early as possible, even with small amounts. Protect yourself and your family with proper insurance and planning, and give yourself permission to enjoy life while you build wealth. Every single person who is great with money today was once a complete beginner. The difference between those who build financial security and those who struggle is not intelligence or income level. It is knowledge put into consistent action over time. You now have that knowledge. The next move is yours. Drop a comment below and tell me which of these mistakes you have been making, because trust me, you are not alone. And if you would like to find out more about money rules, check out these 8 in this video right here. I'll see you in there.